Hut 8 mining has been on an absolute tear over the past couple months. I put out a video a couple months ago explaining why I thought this stock was a buy. Definitely played out pretty well. But what I'll do in this video is I'll go over their recent update for the month of December. I'll go over some things I want to update just on the fundamental side after the merger and all. And then I will go over the Wall Street analyst ratings. At the end of the video, I will give you a breakdown of the financials of this company. So with that being said, let's talk about it. So in December, the company purchased 63 MW substation in Texas to support near-term growth optionality. And the company's software is driving efficiencies at Hut 8's Canadian mining sites. And Hut 8 continues to have one of the largest self-mined Bitcoin reserves of any publicly traded company at 9,100. And then some numbers here. So some changes in total deployed miners under management. We saw that decline by roughly 2,000 month over month. And we saw Bitcoins produced jump up a good amount, though. So we saw Bitcoins produced in November to be about 390, and in December we were at about 450. And then Bitcoin on the balance sheet did increase as well from about 9,129 to 9,195. So good jump there. I'm glad to see that they're retaining some of their Bitcoin. They're not just selling it all, which I really don't like seeing from some of these companies, especially as we go into this halving event, which I think is going to obviously, well, not really a thought. It's almost certainly going to put stress on the economics of mining Bitcoin. So I like to really be in retention mode right now for these miners, rather than going into this, kind of light on the balance sheet like some other miners are. So good to see that from the company. But with that being said, let's talk about some of the fundamentals from this company. So there's really three major events that will happen in 2024. Coin halving event is scheduled for April 17th of 2024. This will reduce the block reward from 6.25 Bitcoin to 3.175 Bitcoin, decreasing new Bitcoin supply entering circulation. In 2024, we may see some regulatory transparency regarding Bitcoin ETFs. We may see some approvals, maybe up to 10 ETFs could be approved, which would really just push a bunch of institutional money into the crypto space, which would obviously be a positive for miners, for the entire crypto space. So also over 92.8% of Bitcoin has already been mined, with approximately 1.5 million Bitcoin remaining. This exponential dwindling of future supply lends scarcity value. And then, while immediate post-halving effects may be muted, history demonstrates that Bitcoin typically embarks on a long-term bull cycle from about 6 to 12 months after each halving event. And then when we talk about the risks with the crypto space and this company specifically, while Bitcoin mining companies stand to benefit immensely from rising crypto prices, there are definitely some challenges that you need to be considering. So Bitcoin mining is a highly capital intensive endeavor that requires significant investment in GPUs to increase hash rate and maximize coin production. However, with each halving event, rewards are cut substantially, meaning miners must grow their hash rate power just to maintain pre-halving output levels. These further drives up electricity costs and maintenance expenses. And regulators have taken notice of this extreme energy usage, as China previously dominated due to inexpensive coal, but has since banned mining over environmental concerns. Other jurisdictions may follow suit without meaningful progress on sustainability, while miners are exploring renewable solutions like solar. Green energy infrastructure requires extensive long-term investment, though, and we've seen some other miners come on and really make that kind of their whole shtick. Clean Spark being one of them. I've covered that stock on this channel. And then for these reasons, in my opinion, miners should diversify beyond solely focusing on Bitcoin extraction. Relying exclusively on a single volatile asset class is very risky. A better strategy is for companies to develop diverse revenue streams in fiat currencies to weather downturns. Additionally, holding some portion of mined Bitcoin according to a set strategy rather than constant selling allows benefit from the upside potential that Bitcoin has, and I'm sure many of you watching this video believe Bitcoin has. And I really think Hut 8 mining is moving towards that. And stick with me, I'm about to tie this all in. So Hut 8 mining presents a compelling investment opportunity, which is premised on a balanced business model and material Bitcoin exposure. Recently merging with US Bitcoin Corp, Hut has strategically expanded beyond sole reliance of mining operations for its revenues, with numerous opportunities to earn fiat income. Also, the acquisition of TerraGo's 5 data center facilities in Toronto in 2022 introduced a profitable, high performance computing segment into the portfolio. This it really couldn't have been a better time to jump into some data centers in 2022, right before that AI boom, because these data centers are basically the lifeblood of AI. AI runs on big data, which makes these data centers very, very important. So it was really a great time for that acquisition. Honestly, couldn't have been any better for Hut 8 mining. And then Hut has experienced significant growth in mining hash rate, and they had their efficiency actually reach 7.5 x hashes per second. While the expansion is noteworthy, Hut's anticipated year-end 2023 rate remains relatively average compared to peers such as Mar and Riot, who are targeting or achieving mining hash rates between 10 to 17 EHs. And however, this escalation of hash rate appears to be of lesser importance in Hut's future strategy. Instead, the management's focus has shifted towards diversifying revenue sources by generating fiat income, which I think is really smart. This prudent approach positions the company well for the upcoming Bitcoin block reward halving event scheduled to take place in just 5 months. On the other hand, Hut is also exploring diversification into the energy sector by placing a stalking horse bid to acquire certain assets of Validus, its former power supplier, to its Bitcoin mining facility in North Bay. If successful, this strategic bid would result in a 80% ownership of New Power business and put an end to all the litigation claims and counterclaims between Hut and Validus, which, no one really wins in a lawsuit. So I would love to see that kind of end. And then finally, compared to solely holding Bitcoin, Hut offers a preferable risk adjusted opportunity, in my view. It it has a diversified business model which provides ongoing revenue and upside even if Bitcoin does not move as expected post halving or regulatory clarity is delayed or murky. And then, furthermore, as per the comparison that I'm about to make, Hut remains comparatively undervalued to some peers. But with that being said, I'll jump into the financials in a second. I just want to cover the Wall Street analyst ratings quickly. So, there are 3 bullish ratings on Wall Street and 0 bearish ratings. So that tells you that general consensus on Wall Street is a bullish one. There isn't a single bear on Wall Street for this stock, which is awesome to see. And just in case you don't know, institutional money really follows these ratings. So to see a general consensus of bullishness is very good for the company and really signals that this company should continue to garner more institutional capital. And then with that being said, let's take a quick look at the financials for this company here. So we can see that when we take a look at just the pure performance over the past year, Mara is actually the #1 mining stock. You can see kind of all the performances there. So Hut is honestly at the lower end in terms of performance. So I think we could see that change in the new year. And let's just take a look at the valuation for this company. So first off, Hut 8 mining isn't making money right now. We're not EPS positive. but we have a price to sales ratio of 8.4, which is actually cheaper than Riot, cheaper than Mara, and is cheaper than Cypher as well. So we're kind of middle of the pack in terms of price to sales. And then if we take a look at the growth metrics as well, unfortunately, growth doesn't look great for Hut. We saw revenue growth actually turn negative over the past year, minus 38%, which is one of the worst growth numbers over the past year. It's actually like the third worst out of all these peers. So don't love to see that. But in terms of profitability, we actually rank out pretty favorable. So Hut 8 Mining's gross profit margin is 42%. So gross profit just being what a company makes for what it sells, simply revenue minus cost of goods sold. So 42% is actually better than all of these companies besides CleanSpark, Wolf, and Cypher here. So not a bad number there. Definitely not a great number, but nothing horrible. And then if we take a look at the balance sheet, it's very important to be watching the balance sheet for a company that isn't making money, because anytime a company doesn't make money, you always want to keep your eye on the balance sheet, because this is how the company is funding its future operations, basically, right? So the company has $12 million in cash. They have $140 million in debt, which means they have $130 million more debt than they do cash. And they're spending about $21 million a year to fund this company. So unfortunately, their cash on hand really isn't, um, doesn't really provide years of runway, right? So unfortunately, from a balance sheet standpoint, Hut 8 Mining definitely isn't really a safe bet in terms of a balance sheet. Obviously, they have things that are going to change, but from a balance sheet standpoint, we aren't really super comfy from a shareholder standpoint. And then, this kind of pales in comparison to a company like Riot, for example, which has $240 million, or excuse me, $290 million in cash, roughly $22 million in debt. So they actually have $267 million more cash than they do debt. And they're only spending about, well, they are spending about $260 million a year to run the company. So they have over a year's worth of cash on hand. But in general, I wouldn't be surprised if a lot of these Bitcoin miners came out and issued new shares. Share dilution wouldn't shock me, because when a company needs capital, there's two things that they can do. They can go to the debt market and raise capital there. And given how high interest rates are right now, I don't see that as advantageous for the company. I see more of an advantageous strategy as to go to the capital markets and raise equity that way by issuing new shares, commonly known as share dilution. And that really has never been positively received by a shareholder. But overall, I do think Hut 8 Mining has a great upside potential. I love that they're diversifying their revenue streams. I think going into the halving event, that's very prudent for shareholders, and I think that's a good move. So overall, I think Hut 8 Mining has a really good future. I love the crypto space. I've covered a lot of these names. If you're interested in some of these names, check them out on my channel. I cover a ton of them. With that being said, if you would like a free portfolio review, free coaching breakdown, I do that in the comments below. You can sign up below. But with that being said, I hope you enjoy this video. If you did, please like and subscribe. I'll see you here next time.